Hi, this is Joe. We're going to talk about the S&P 500 index, and then I'm going to go into a trade on the QQQ. I want to give some in-depth analysis on the Qs simply because, from the starting point, it was a little bit more extended. Felt like it was the index that had a little bit more room to pull back, and so whenever we can learn from specific trade setups, I think that's to our advantage. I'm always trying to find ways, I can feed you, I can give you a few fish, right? I mean, I could throw some fish your way, give you a few ideas and in the analysis, but I'd rather teach you how to fish. And that's really what the goal of the channel is. I want to make sure you're learning this material because you should be able to adapt to it. There's some specific things that you can look for. One that I'm going to show today that can really help with your timing. So let's go ahead and let's make sure we start. And always, just when you're talking about the market, I think it's real important to just follow these four things. Make sure you have a trend and momentum component to what you're doing when you're analyzing what's going on, the volatility, overbought, oversold, and then a sentiment indicator. So if we go straight into the S&P, not much changed on the monthly chart. We still have some room back towards the 3,000 mark based on the 18-month. I want to zero in on the weekly. The 3,200 is the 18-week. It's a little bit above that now. Somewhere in that 3,200 zone is really what the target area is for this market. And, we'll just have to see. I mean, it's very possible. So catching up with the 18-week is really what my target would be. I'd prefer to see price come down to it simply because I want to see the sentiment numbers can continue to drop. Just as an update on that, the sentiment dropped from 43 down to 36 this week. So we are starting to see the bulls start to drop off, a little bit more bearishness. So that is a good sign. But normally when you're working off of a strong reading like that, it takes a little bit of time. But it would really help if we got a little bit more selling to take place and have this drop down, maybe scare a few people. I want to look at the daily chart. We have broken the trend on the daily, or the trend line, I should say, and now we've gone up and sort of tested this area, and we've tested the 18, and now it's starting to drop off. What we haven't done yet, and again, something I focus on in my book, is the 1, 2, 3 change in trend. That has not been completed yet. We'd have to take out this low from here to really kick that into the downside. Very possible that we're going to do that. Maybe we even do it tomorrow. I would just guard you against be on the lookout for the type of situation where you come down and nick it early in the morning for the first 30 minutes. And then by the time you're an hour into the day, it's already reversed and gotten back above. To me, that's not a real signal. I kind of want to see a little bit of follow through after the first 30 minutes. So just something to be aware of. Let's switch to the volatility chart. And if we look at what's taking place, again, we're trying to get this, the 18 to roll over. It's actually kind of flat right now. And, I think it still wants to work its way down towards this 3,200 area. And especially when we look at what the ATR is doing and the volatility growing and the fact that the moving average is rising, I still think we're in kind of a higher risk territory. If we go back and look at the market conditions, the volatility measure is now negative in my view. Sentiment is coming off of a negative, and overbought, oversold. We obviously have been overbought in the near term. It's starting to work that off a little bit, and then obviously what we're talking about in terms of trend right now. So, if we go through this market conditions right now, we've lost a few of the components here just in the last 4 or 5 days. And obviously that means we're in a higher risk territory for the overall market. I want to look at the Qs we go down into the lower time frames. Now we do have the same situation taking place in the average true range of the Qs. That increase in volatility does raise risk of continued pullback, but this is a very volatile index, and we just have to be you have to be on your toes here. I want to go back and look at a monthly chart of this. Just make sure that we can see that this is the reason why I've been bringing this up is, there's opportunities near the 18, inside the 18 and the 40 in that zone. And then there's when you get stretched away, the risk profile of an index or an individual stock starts to really grow. And, you need to work off this overbought condition some way. If we go into a real blow off phase, this will only pause for a week and then we'll just keep going to the upside. And then when it ends, it's going to end really ugly. If we can start to correct here and work our way down in this QQQ, and actually I'd love to see this come down closer to the 18-month, maybe even come down to even at 250 or something like that. If we look at the weekly chart, 259 is the 18-week, but I'd love to see it come down 240, 250, something like that. Shake some people out. Get this to come down closer to this old breakout area, this prior breakout zone, and I think that would really improve the sentiment numbers dramatically, and certainly work off the overbought condition. I want to go down to the hourly, and first, before I do that, I want to show you something. So this is out of my book. This is one of the pages in my book. So this is a specific pattern. I'm showing the 18 and the 40 there. Obviously, with the arrows there, you can see which is which. And what I'm trying to show is that there's a pattern where when there's a buy signal, and that would be a simple crossover to the upside where the 18 crosses above the 40 to the upside. Now, typically, you should construe that as being a positive, right? The 18 is crossing back above the 40 to the upside. Well, the reality is these crossover patterns are not all that great. You can go back and backtest them if you want, but the reality is that I don't like to use them that way. There are times when the bigger picture pattern, like if the higher time frame is very bullish and you get this buy signal, then it's giving you kind of like a lower risk, secondary buy signal that's taking place. But a lot of times what happens is you'll get this move where you come into the zone. And what I mean by that is when you get the crossover where the 18 crosses above the 40, price will come into that zone and then it'll go out of the zone. And when that takes place, if you don't follow through from there, if you just come out of that zone and then fail and come back to the downside and break the 40, then it's a buy signal that is failing. I talk about this in a lot of my videos, and I call it the opposing trend trigger, because what is actually very powerful about this pattern is if the longer term time frame, the higher time frame is bearish and you get this signal, you're getting yourself a really good entry point, and it's probably going to go pretty strong the other way. Let's go to the hourly chart of the Qs, because this is really what I wanted to explain. We had the pattern from last week, and then it came up and it rallied. And if you notice, we had the 18 cross above the 40, and then it came into the zone where the price came in between the 18 and the 40. And then we got this green bar right here where you're basically getting a buy signal. 18's crossing above the 40, we come in the zone, and then we're trying to come out, and we're trying to start a new uptrend. And what happens is not only does it not take out that high, it only goes up for one bar, and then immediately the following bar takes out that green bar. And that's really your signal. I like to wait for the 40 to be broken, but the reality is once you take out that green bar, you're pretty much ready to go to the downside on the short side. And so that is the trigger. And if you wait, you could have waited for the 40 to be taken out. But either way, if you did it that way, you are in at this level here, and your risk would go, somewhere up in here, depending on how you want to play it. But, you really would have been in on this trade, with pretty minimal risk and a move to the downside. Now, I know some of you might be saying, well, the daily chart is not currently a pattern of 18 below the 40 and both lines declining, which is what I'm constantly looking for. But I've had questions about how to get in at a bottom and how to get in and how to look for reversal patterns. And I want to make sure you know that if you have a 1, 2, 3 developing, and you break the trend line, and then you rally back up and test, you have 2 in place. If you have 2 in place and the rally back up is not very strong, and the way we would evaluate that is by looking at the hourly chart and look at how weak the ADX was on the rally up. So we can see this moving higher, and ADX is actually dropping to the downside. The blue line here just keeps dropping. So I know that when this rally is taking place, there's no real strength to it. And so I'm getting the combination of a 1, 2 developing on a daily chart, and now I'm getting a pretty nice failure pattern or a buy signal that fails on this hourly chart. And, you know, obviously you get a quick move like this to the downside. I mean, we covered some of our position. We're actually, you know, the reason why we're in this trade to the downside is to protect longs that we have. So we have positions that are longer term. And we're trying to stay in them. We'll see what happens. I mean, it's possible we'll get stopped out of all of them, but in the meantime, we're sort of protecting our downside by being short the Qs. And but that big of a gap down in such a quick period of time, we just felt like we ought to take some off. So we did take some profits. But the reality is we don't know what we're going to do from here. I mean, maybe we rally up. Maybe we make a turn here. Maybe it's come down to this support area. I mean, we can clearly see that we've come into this zone of support. How do we react? I mean, we don't know. There's no way of knowing. All you can do is see how it reacts here. If it just has one bar to the upside and then tomorrow and it starts back down below these 2 moving averages, then we're probably getting ready for something really ugly over the next week or two. So guys, make sure you hit the subscribe button if you're not a subscriber, and please hit that like button as well. All right, thank you.